Candle Range Theory Trader back with you with another video, just going over the weekly and daily candle range theory market structures that I look for on a weekly and daily basis. So let's not waste time and get into it. So the main reason I'm going over these structures and patterns that I look for, is that I wanted to simplify my trading as much as possible to look for just a handful of patterns. That way you build the muscle memory in your mind of what you're looking for, and you know that once what you're looking for does not play out, that gives you all the more confirmation to exit the trade. So here's the first structure that I look for on the week. This is nothing new. If you've seen other videos on this channel, you'll understand that this is just nothing, it's nothing groundbreaking here. The first type of pattern that I look for on a weekly basis is just what's known as a basic classic expansion model. The only trading day on this model is Tuesday. This is all I want to see. I want to see. You don't trade on Monday using this model. You let Monday set the initial high and low of the week. On Tuesday, what you want to see is price go below Monday's low and then rise above it, ideally closing either inside of Monday's range or above Monday's range, and just expand upward, creating the high of the week somewhere around Thursday or maybe even Friday. It just depends. The chart will not look, or the daily chart will not look exactly like this every single week, but the general idea is still the same. The non-negotiables that Tuesday does create the high of the week, and around Wednesday or Thursday you should get a decent return risk to reward ratio for these couple of trading days between Tuesday and Wednesday, or possibly Tuesday to Thursday. And the same thing in reverse, where Monday sets the initial high and low of the week, and then Monday's high gets rated and then closed inside or below, and then price expands downward to create the low of the week somewhere around Thursday or Friday. That's it. This is the only type of pattern that I look for on a Tuesday. All right, in terms of the weekly long-term swing trade model. All right. Now, the only other type of pattern that I trade is the midweek reversal, which is Wednesday. And what you do here is that you just let Monday and Tuesday set the initial high and low of the week. And ideally, you want to see Wednesday make the low of the week. It's going to raid Monday and Tuesday's low and ideally close inside of them, and then expand upward or downward depending on the direction for the rest of the week. Okay, so the only trading day this day is Wednesday. The low or high of the week is created on Wednesday, and price simply expands in that same direction. Now, will the chart look exactly like this every single time? No, it will not. But this is the only type of pattern that I look for when it comes to trading on Wednesday using a swing trading model, a midweek reversal. So it's only Tuesday here, and Wednesday here. This is what I look for from a swing trade position. Okay, whereby I enter a trade on Wednesday and I look to exit either on Thursday or Friday, either one of these days. All right, that's it. Now, from a day trading standpoint, this is what I look for. Okay, I look for the basic candle range theory. It's a 3 candle pattern. I know you see the days of the week here, but disregard that. I trade the 4 hour chart. So normally I look for this range right here to be created between this will be like the 1 o'clock candle. This will be the 5 o'clock candle right here. And I'm looking to enter somewhere right here. And then 9 o'clock candle being on the 4 hour chart going straight down. And that's it. So this is the 4 hour pattern that you're looking for here. If you want to call it a triple top, that's fine too, either way. But at the end of the day, this is what I'm looking for: an initial range, the high of the day being created somewhere in the 5 o'clock hour or the 9 o'clock hour, and then the rest of the day to go down. So there's 2 time frames that I can use this model for, where that's the first candle right here will be 1 o'clock. This candle right here will be 5 o'clock, and then this expansion candle would be 9 o'clock. Or this candle right here would be 5 o'clock, the high of the day being created at 9 o'clock, and then the 1 o'clock candle onward, straight drop. All right, that's it. So at the end of the day, the simplest way to remember this is that the high or low of the day, I'm looking for that to be created either between the hours of 5 and 5 a.m. London during London session, or an Asia session, or London session or USA session, not Asia. Okay, that's the point. Okay, so again, I don't trade the daily chart using this pattern. I just don't. This is just I use this pattern on the 4 hour chart. The only other thing I use is the 2 candle range theory. All right, whereby this candle would be, you could say, 1 o'clock, and then this candle right here will be 5 o'clock. All right, so the high of the day being created at 5, and then you look for 5 o'clock to do a straight drop. It's just 2 candles, 1, 2. I prefer to see this, but sometimes you'll end up with this. So what do I mean? You'll start right here. Sometimes you'll start right here with a good 1 o'clock range. You'll see 5 o'clock make the high of the day, and you'll think it's going to straight drop, but instead of straight dropping and wiping out all this price action, it'll just stay here. And it'll take 8 hours instead of 4 hours. So this would take 4 hours. This takes 8 hours, 4, 8. Okay, I hope that makes sense. So sometimes I want to see this between, like I said, the 1 o'clock hour on a 4 hour chart, and then London session around 5, between 5 and 9, making the high, and then a straight drop. But in case it consolidates, it's going to do this and then straight drop. But either way, you want to see this low of the range get taken. So one of these two possibilities play out. But at the end of the day, this is still an 8 hour time frame between these two candles or this one candle here. It's going to be 4 to 8 hours. All right. Those are the only structures that I look for. Okay. So the beauty of doing it like this is that these are the only patterns that I see. So again, how do you know when it's time to get out? So I'll end with this. If I'm looking for the low of the week to be created on Tuesday and that doesn't happen, if this low doesn't hold right here, if I get stopped out, then I'm expecting price to continue. Now, what I can also do is you can also have possibly a midweek reversal. So just because Tuesday doesn't create the low of the week, it may get created on Wednesday. So price will drop here, and then reverse. Either way. But if the low of the week isn't created by Wednesday and then expanding to the upside, then I just disregard the pair because I'm not looking for a midweek reversal on Thursday. All right. Again, on the short side, if price keeps rising above Wednesday's high, I'm out. I'm not looking for a midweek reversal on Thursday or definitely not Friday. And then for these models here, I'm looking for this high to hold. So if this high gets created at 5 o'clock, I'm not expecting 9 o'clock to come back up and take out this high. All right. If it does, then obviously the trade is invalid. And the same thing here. If this is if this is 5 o'clock, okay, this is London session, and at 9 o'clock, price goes up and then it keeps going up and breaks this high that was initially created, then the pattern is invalid. So that's it. This is all I look for. If price does something different than the pattern that I want to see, then it's just a small loss. But when you scale in with these, if you catch good entries and catch all of this price action to the downside, then it's going to increase your bottom line and give you more entries and increase your profits as you're right. So now that you know, so you have to pick out your own patterns. But once you have your patterns that are set, either from a day trading perspective or from a weekly trading perspective, once you have it, you have to be humble and flexible enough to know that, okay, if this pattern is not working, obviously price is doing something different. So let me go ahead and just get out and save my money for the next time this pattern plays out. And that's it. So the goal in surviving is keeping your losses small and making sure your wins are big. So that's it. So these are the structures that I use. Once again, for swing trading, I only trade on Tuesdays and Wednesdays. And then on a daily basis, I trade USA or London session using the 3 candle range theory or the 2 candle range theory. That's it. There are more candle range theory patterns out there, but these are the only two that I prefer. So if you don't like these, that's fine. Pick out your own. You don't have to trade exactly like me, but find something that fits you and your schedule. So I appreciate you watching. I appreciate your time and attention, and have a great rest of your day.